I challenge you to compete in this simulated investing tournament to win some serious money. I hope you'll join us. I'll be coaching you every step of the way.
Hi, good morning, TJ.
Hey, good morning, Keith. It's Sean. I'll just get the quad one answer maybe out of the way because I figured you might ask us as well because our space is super sensitive to the quads, as you're very well aware of. But if I look back at what you had just asked, Howard, the Las Vegas Strip is probably the single biggest beneficiary of falling input costs, irrespective of like if you have a strong view on oil, you know, that might positively impact the cruise lines, although some of them are pretty well hedged for the coming year, so not a huge incremental change on that. But the Las Vegas Strip does back test extremely well, actually on a more nearer term, sort of 10, 15-year back test. The best out of all of our subsectors of GLL would be the Las Vegas Strip. So that includes MGM and Caesars more specifically, but given Wynn and the slower recovery in Macau and just what they're doing with their Vegas asset and the expansion that they've had, that one looks like a really a big winner with a potential extended quad one here in the U.S. And then obviously macro being a little bit more favorable in China could be bullish there too. I'm not just going to talk about Vegas. I had one thing to mention on hotels. We put out our monthly data compendium note. It's become sort of part of our process. Admittedly, when we were sort of going through the final data work and writing the note, I was like, I don't know if people are really going to give a crap because, you know, COVID obviously is impacting the stocks. But obviously, people are looking beyond that, and as they should. And really the takeaways from our work of going through, you know, concurrent indicators, alternative data like downloads and app usage, all that kind of stuff, desktop traffic, and then our forward-looking indicators, the takeaways are kind of the same as what we've been seeing. So you've had a little bit of improvement on sort of business transient, corporate transient proxies, and a little bit of improvement on the midweek. However, it does appear that group, sort of your larger conventions and group meetings, company meetings that haven't happened for about 18 months, those are really the factors that are driving the incremental growth on the sort of Monday through Wednesday schedule. But really what's shown to drive RevPar growth right now, or what continues to, is the weekends. And you're seeing explosive growth. And who knows if this latest COVID scare is going to derail all of that. But really the only thing we've gotten wrong with hotels from a data perspective is we haven't been bullish enough on the U.S. leisure consumer. And I think we are.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.